Welcome to the HCL Tech boardroom. For the third quarter, HCL Tech's earnings have been slightly disappointing, with the dollar revenue growth absolutely flat and the EBITDA margins also coming in slightly lower than what the street was expecting. To talk to me about the earnings, I'm joined by Mr. Anant Gupta, the President and CEO at HCL Tech, and I have Mr. Anil Charana, the CFO at HCL Tech. Thank you, gentlemen, for speaking with us at NDTV Profit. Mr. Gupta, let me start with you. The dollar revenue growth is absolutely flat. People expected better from HCL Tech, given that quarter after quarter you have surprised. What happened? Because if you take a look at America, it's absolutely flat. Was this a tough quarter? What happened?
So for us, I think we had another quarter of consistent performance. You can't predict your currency movement. If you therefore look at from a constant currency perspective, our quarter grew by 2.7%. If you look at it from an LTM Y-on-Y perspective, we grew by 14.4%. So I would say it's been a consistent performance, and this is on the back of also a 6.2% growth in the previous quarter. So I think the way to look at the market is not just look at it purely sequentially, but look at performance on a Y-on-Y basis, and that really has been consistent.
Right, but we have been seeing your performance even sequentially has been better in the past. What's happening now? Are you seeing a slowdown? Are clients hesitant? What has happened in America that, when the growth, the GDP growth was looking so strong, the deals are not coming through? Why is it a flat quarter in America?
If you look at Americas, let me just take some numbers. Americas grew by 12% Y-on-Y on an LTM basis. Europe grew by a little over 20%, and ROW a little over 11%, and this in spite of a subdued India quarter. So I would say most geographies are performing well from a pure constant currency basis. They are doing well. And even if you look at the sequential growth, which you're pointing to, 2.7% is a good growth.
Right, that's of course on a constant currency basis. Mr. Chanan, let me ask you, your EBIT is down 10%. What are the cost pressures? What has led to this?
So let me first come back to your question on Americas. So for the last two quarters, which is July to September and October to December, we have shown about 6% quarter-on-quarter growth. So just please look at it with reference to have that in the back of your mind when you're talking about the growth this quarter. So there is nothing which is to stop orders. It's a very good market for us. It's a big market for us. So we are getting business, we are winning business, we are executing very well there. Coming to your question on margins, so it's a deliberate sort of a investment cycle which we said we are going to embark upon, and we sort of have been declaring this many quarters ahead that we are going to embark upon an investment which is important for our business in the future. So what are these investments? These investments are in creating co-innovation labs with our customers. We have set up an innovation lab right in the heart of London. Okay, we have set up labs in Bangalore, 100,000 plus square feet. We have set up facilities in Cary, in North Carolina, 100,000 square feet again plus. So these are very large facilities. We have set up a lab facility in Milan, in Italy. So very large facilities. So these are the type of investments. We hired 100 professionals, technical architects, etc., who will sort of drive growth in the digitalization space. We're making investments in InfoSec, the information security, because it's important for our customers. We have stepped up our investments in marketing, participation in marketing events and other other marketing initiatives. So all these are investments, and these are all were planned at the beginning of the year and have taken place.
Does that explain why SG&A expenses are higher?
SG&A expense is higher, direct cost is higher, so it depends upon where they fall.
Right, and the cross-currency hit this quarter is 280 basis points?
The cross-currency hit this quarter is about 60 basis points.
All right.
It's on margin, on revenue.
On the margin, on the revenues, yes, 270 basis points.
All right. Mr. Gupta, we are looking at some of the verticals, and we've seen, steady growth in IMS and engineering services. But when it comes to your retail vertical, it has degrown 10%. What has happened? Is it a client-specific issue, or you're not seeing traction in this vertical at all?
So let me just first cover all the horizontals and then the verticals. So as you rightly said, infrastructure, we're seeing a little short of 20% Y-on-Y LTM growth in constant currency. Engineering services a little over 20%. BPO or business services grew by 28%. Applications overall grew by about 8%, which you look at it from an industry average perspective has been good. If you now segregate that portion into what we believe as run the business services and project-based services, run the business services done well. The project-based services, after 2 quarters of very strong growth, saw a completion of a specific engagement in the retail space. So that answers both the reason for a degrowth slightly on the enterprise system integration business as well as on the retail and consumer products vertical side of it.
Right. But what are clients telling you? When you sign the deals and when you start booking the revenues, is there a large lag? How is execution going on from here?
So for us, execution across the board is going very well. And the lag time will depend on the kind of service offering you are in. So if you are into large deal IT outsourcing engagements, we will see, we continue to see a larger lag time because the complexity is increased. So significant amount of transformation work along with the steady state operational work, which ultimately will result, is kind of increasing the lag time between when you book and when you bill. Whereas it will be slightly different in the digitalization space, but the sizes of digitalization engagements are still relatively small. So we'll see more uptake, quicker up and quicker closure of those projects, depending on whether they really move from a POC to a full-fledged transformation program.
And what was the total value of the deals signed in this quarter?
We continue to deliver well. So we had a quarter of another $1 billion of booking, largely driven, I would say, from the Americas, largely from financial services, infrastructure management, and engineering services. So largely, I would say, broad-based from that perspective. This is on the back of the $2 billion plus booking which we had in the previous quarter.
Right. I want to understand from you what's happening in Europe. We've seen strong growth there, and rest of the world has also seen strong growth. Are these one-offs, or are these durable kind of growth that we'll see going ahead as well?
See, as we've been always saying, Europe is an increasingly, the addressable market for us is increasing, right? Europe has always been locked in. So the Y&Y growth in Europe has been a little over 20% on an LTM basis. So Europe continues to be a strong market, given that the addressability by IOPs, especially us, was restricted. Now, in the last few years, we have made significant investments in that market, which we are seeing results. So I would expect Europe to continue to do well. ROW, again, our story has been about a very selective play. So we said we will focus on a few markets. A market which is largely driven by projects, we now see an increased uptake of recurring engagements like IT outsourcing, which we see in US and Europe. So that is why you see a buildup of growth in ROW. And this in spite of the fact that India is still a subdued, has really not kicked in from our perspective.
Right. During the January to March periods, clients also, decide what they want to do for the year. They strike up their budgets. What are clients telling you? Because, this quarter, which is January to March in the US, has been slow, be it bad weather, be it whatever. Are they looking at more localization of, when it comes to IT services? Are they hesitant to come to, outside players like, the Indian technology companies? Are they redrawing the budgets for this year? What are clients telling you?
So the answer will be different from different services. So if you look at IT outsourcing, infrastructure management outsourcing, application management outsourcing, the market continues to be very buoyant. There is enough, if you go by even the latest ISG report, there is significant traction in there. Obviously moved a lot more towards H2, but still the momentum is there. The churn or the renewal is still increasing. So in that space, we see no slowdown. We continue to see deal signings in that marketplace. I think there's an increase in lag between signing and recognition of the revenue stream. On the digitalization side, and which goes to the point as to why we are investing, really comes from some of the points that in digitalization, you are really looking at front to back, and therefore you're looking at more co-innovation with the customer. It therefore calls for more increased expertise in the front instead of offshore, right? Which requires the investments in the labs, which require the investments in the senior architects and senior consultants for that specific business, which is why you see all that shift and the investments happening in that.
So Mr. Chanana, what happens then to the margins going ahead? Because this investment that you are making in the front end, like Mr. Gupta is saying, is going to put pressure on your costs. We've already seen that happening over the last 3 quarters. EBITDA margins are going down. Will this continue? And what is the range you're working with?
So, as I said, we already guided for that range of 21-22. We'll continue to operate in that range. That's what I mean. So the level of overheads have elevated now because of the investments we are making. So we'll continue to operate in this range.
Right. And you don't see margins going lower from here? You see them stabilizing? What is it going to be like?
I mean, within this range, they will keep on varying from quarter on quarter.
Right. And what's the cash position like for HCL?
1.5 billion.
All right. So, Mr. Gupta, lots of money still there. Other than investments, any acquisitions that you're going to be looking at?
So we keep looking at, I mean, it's also we keep looking at what fits our bill. Obviously, our investment thesis around both market share enhancement or differentiation for new businesses. So we will continue looking at what's there in the market. For us, what's key is the client profile, and while there are enough different entities there, the client profile is an extremely important thing, because our whole thesis of relationships beyond the contract allow us to do only few things, and we would like to do them deep and with fewer customers, but in a very significant way.
So for this coming year, this is of course the 3rd quarter for you, 4th quarter and for the next couple of quarters, what kind of growth are you looking at in the revenues? Because of the the investments you're making, when will the kicker come on the top line growth, and what kind of growth are you looking at?
So, first, we don't provide any guidance, but from that perspective, I think the ITO market will continue to drive most of the momentum. We continue to see Internet of Things drive differentiation in engineering services. Whether we continue to see repetitive deals quarter on quarter like we'd announced in the previous quarters, I would say we're still cautious about it before we say that it's really turned around and the inflection point has come. On the digitalization, I think it's still a long journey, and therefore it's, in my view, that's the service offering of the future. So it will take a while before it really kicks in from a momentum perspective into the overall growth.
Right, Mr. Gupta, Mr. Chandana, thank you so much for speaking with us at NDTV.
Thank you.